Sam here. I'm going to do a 5-minute stock recap. Today is 19 March 2020. Uh, the market is up a little bit today. The S&P 500 is about even. The Dow is even. The Nasdaq is up a bit, 1.4%. The Russell's up 1.8. The Russell is the 2,000 smallest companies in the market. The VIX, the volatility index, is at 80. To have your money invested in the market, the volatility index needs to be 20 or less. So what happens when the VIX or the volatility index is higher than 20? It gets so uninvestable that people are scared to death and they cannot invest. So everything ends up going down. Doesn't matter what you're holding, gold, bonds, silver, stocks, they all go down. And if we look at the volatility index over the last 5 years, it's averaged about 20, right? So we're averaging about 10, 15, 20 all year round. So when the market is up and down, you can buy the dips. Now we're up at 80. Everyone's panicking. Everyone is scared to death, which they should be, because we've lost $4 trillion in the market already in 30 days. And if you look at the Dow was 29,000 a month ago, and now it's 19,000. So we're down 30%. So if you're down 30%, you got to make about 45% just to get back to even. Most people have erased their gains dating back to 2016. So and there's no positive in sight yet. Trump can send everyone $1,000, and he can send kids $500. They're going to spend that all. They got to pay their rent. They got to pay debt. It's not going to do anything. He's doing these things to try and pop the market, and it does for like one day or half a day, and then the rest of the day just goes down, right? So the reason why the government has to prepare for the pandemic, it shouldn't last 18 months if they do what they need to do, but last night alone, there was 2,700 cases of the coronavirus in the U.S. Italy had 30,000 cases, I think, and they had 3,000 deaths. That's crazy, right? So February 2nd, about a month and a half ago, there was 10 cases. Now there's almost 9,000 cases, and the deaths are going up. So until this is stopped, the market will tank and the economy will be hurting. So when the market is tanking, you either do one of two things. You switch to cash and wait 8-9 months, and you go back in the market. But you might have issues because you got to pay taxes on your gains. There probably are no gains now, though. And your other option is to short the market. So if you're going to short, what you want to do is pick stocks you know are going down that have temporarily gone up because people have bought the dip. Simon Property Group is up 21%. They own malls. If malls are shut down, they can't collect rent from their people. They're going to have defaults. This stock is going down further, right? In the last 6 months, it's gone from 186 to 50. It could go to 20. It could go to 0 and then get bailed out. Who knows? This is another mall stock, Federal Realty. I would short them as well. Then you have your cruise line stocks. They've already gone down enough. They've seen enough pain. I wouldn't mess with them, but they're going to go down tomorrow or the next day. There's no, people aren't buying cruises anytime soon. And then Eventbrite, you can't have concerts, events. They're going to go down. These are obvious, right? So, you have malls, events, cruise lines. They're all going to go down, even though they're up today. And that's your 5-minute recap.